Okay, let's just think about this for a second. What if the money in your pocket, right now, was suddenly worth 20% less? It's a scary thought. Today, we're going to explore a scenario where the Indian rupee could absolutely plummet. We'll look at what that means for your savings, your future, really for the entire Indian economy.
So let's just get right to it. $1 for 100 Indian rupees. I mean, imagine waking up and seeing that headline. It sounds like a total nightmare, right? But the thing is, the analysis we're breaking down today shows that with all the geopolitical pressure that's building, this is, well, it's escalating from just a bad dream into something that could become a very real possibility. And here's what that nightmare actually looks like when you check your bank account. A 20% drop. Just gone. The value of your savings could disappear practically overnight. This is that hidden cost we're talking about. It's like a direct hit on your financial security, and it's all being fueled by a crisis happening thousands of miles away.
All right, so let's back up. How did we get here? How did we get to a place where this is even a conversation? Well, it all starts with this subtle but really significant shift in India's position on the global economic stage. Now, what's really interesting here, and kind of counterintuitive, is that India's economy is still growing like crazy at a really high rate. So you have to ask, why did we slip in the rankings, dropping from 4th to 6th largest economy in the world? Well, the culprit isn't our productivity. It's not what we're making. It's the crashing value of the rupee. Plain and simple, a weaker currency makes our entire economy worth less when you measure it in US dollars.
But this economic slip isn't just happening in a vacuum. The real intense pressure on the rupee is coming from what you could only call a perfect storm of international conflict and, well, a whole lot of political uncertainty.
So for more than 50 days now, the US-Iran conflict has just been rattling global markets. I mean, for a minute there was a glimmer of hope, right? The Islamabad peace talks, but just as some analysts predicted, those talks fell apart. They failed. And now, with no diplomatic solution anywhere in sight, the instability is just continuing to grow and grow.
And look, if you're hoping this is going to end soon, don't hold your breath. Key players in the region, like Prime Minister Netanyahu, have made it crystal clear that de-escalation is it's not on the table. A statement like that signals prolonged conflict, and that means prolonged economic anxiety for, well, pretty much the entire world. And then, just to add more fuel to the fire, you have what our source material calls the Trump factor. I mean, just look at this contrast. You've got a tweet from the White House saying the crucial Strait of Hormuz is 100% open. But in reality, at the same time, Indian cargo ships are literally being fired upon by the Iranian military. The source argues this isn't just bad communication. No, this is an intentional psychological game, and it's creating a kind of confusion that the global economy just can't handle. Okay, so you've got all this geopolitical chaos swirling around. But how exactly does that translate into a weaker rupee for India? Well, the analysis we're looking at breaks it down into 3 pretty clear and honestly devastating steps. It's really like a chain reaction. It all kicks off with the oil trap. That, in turn, leads to the investor panic. And the whole thing is made so much worse by the failure of diplomacy, which basically leaves India with no good options. So let's break down each one of these steps.
All right, first up, the oil trap. With the Strait of Hormuz, a key shipping lane, in constant danger, oil prices have just skyrocketed. We're talking past $150 a barrel. Now, as a massive importer of oil, India has no choice but to pay this super inflated price. And crucially, we have to pay for it in US dollars. So what happens then? Well, this pushes our current account deficit, which is basically the gap between the money flowing into the country versus the money flowing out, to a really dangerous level, about 2% of our GDP. Think about it. We are spending way more dollars than we're taking in, and that puts this immense downward pressure on the rupee.
And that leads us directly into step 2, the investor panic. This is where words, political rhetoric, start to do real, tangible economic damage. A quote from the source puts it perfectly. When global leaders share derogatory posts calling India a hellhole, it does way more than just hurt our pride. It sends a signal to global investors that the partnership with India isn't really valued, and that creates a ton of fear and uncertainty.
And what's the result of that fear? Well, here it is, a 10% correction in the Indian stock market. Why? Because those now fearful global investors are pulling their money out. And when all those dollars flee our market, the value of the rupee, well, it falls even further.
Which brings us to the final piece of the puzzle, step 3, the failure of diplomacy. See, normally, in a situation like this, India might have been able to get cheaper oil from other places, maybe Russia, for example. But right now, U.S. policy has completely blocked those options, and this is the squeeze. We're being forced to pay more for our imports at the exact same time that investors are pulling their money out. It's the worst of both worlds.
But hold on, because there's actually another layer to this whole crisis, a much more alarming trend that's happening behind the scenes, something that suggests the world might be preparing for something much, much bigger.
According to the analysis we're digging into, there is a secret war unfolding, one that nobody is really talking about in the mainstream media.
It's the war against scientists.
This might sound crazy, but just look at the numbers. In the United States alone, 12, that's 1-2, top nuclear and space scientists have either died under very mysterious circumstances or have just gone missing. And that's just in the last 2 years. This isn't random. This is a pattern, one that signals nations might be actively targeting each other's intellectual assets, their smartest people. When you put all this together, it points to a pretty terrifying trajectory. You're seeing major U.S. car companies like Ford and GM being asked to prep for weapons production. You're seeing similar patterns of missing scientists in China. It's like the world is moving towards a total war footing. And if this escalates to the worst-case scenario, a full ground invasion of Iran, the global panic that would follow would make the rupee hitting 100, well, it wouldn't be a possibility anymore. It would be an inevitability.
So all of this brings us to the final and most critical question. When you're faced with this kind of immense external pressure, what should India's strategy even be?
And really, this is the core dilemma, isn't it? On one hand, should India take a much more aggressive stance to protect its own economic sovereignty, even if that means risking a direct confrontation? Or, on the other hand, should we maintain a softer approach, prioritizing trade deals at the risk of watching our economy erode even further? There is absolutely no easy answer here, but the choice that's made is going to define India's economic future for years to come. So the question I'll leave you with is, which path would you choose?